crypto comeback of 2025, what you need to know now. In the ever-evolving world of digital finance, cryptocurrencies have staged a striking comeback in 2025, driven by a blend of technological advancements, regulatory clarity, and shifting global economics. After a period of volatility and public skepticism, the crypto market has rebounded stronger than ever, capturing mainstream attention once again. Several key trends are powering this resurgence. Widespread adoption of decentralized finance, DeFi systems by major banks, increasing utility of stablecoins in everyday commerce, and an explosive rise in tokenized real-world assets like real estate and commodities. Governments and corporations alike are no longer dismissing cryptocurrencies as speculative tools. Instead, they're actively integrating blockchain solutions into supply chains, tax systems, and international trade platforms. This new landscape is creating both opportunities and challenges for investors, developers, and regulators. And understanding these dynamics is critical for anyone looking to navigate the space in 2025. Much of the momentum behind crypto in 2025 is coming from how DeFi protocols are being embraced by traditional financial institutions. DeFi, once considered a fringe experiment, is now merging with centralized banking in ways that were unimaginable just a few years ago. Major banks across Europe and Asia have begun to deploy DeFi smart contracts for cross-border payments, loans, and liquidity management, citing cost reduction and speed as primary benefits. These integrations are being conducted through regulated hybrid protocols that retain transparency while adding necessary security layers. Meanwhile, the crypto-native community continues to innovate with autonomous financial instruments, including decentralized insurance pools and algorithmic savings accounts. The synergy between legacy finance and DeFi is creating a Web3 banking era, one where users expect full control over their assets without sacrificing legal protection or transaction transparency. For consumers, this means lower fees, higher yields, and 24/7 access to global financial services. Another massive driver is the explosion of tokenized real-world assets, RWAs, which are bridging the gap between digital and physical economies. In 2025, tokenization is transforming how we perceive ownership and liquidity. Real estate firms are offering property shares on-chain, enabling fractional ownership that can be bought, sold, or traded like stocks. Luxury brands are tokenizing rare watches and art pieces, allowing them to serve as both collectibles and investment vehicles. Even agricultural futures and carbon credits are now being traded as tokens on decentralized marketplaces. This movement is democratizing access to wealth-generating assets, historically reserved for elite investors. For creators and companies, tokenization brings new funding models and global markets. And for buyers, it introduces verifiable proof of ownership, instant transferability, and programmable utility, all governed by transparent smart contracts. The sheer variety of tokenized assets emerging today suggests that nearly every form of value is up for disruption by blockchain tech. Perhaps the most relatable trend for the general public in 2025 is the widespread use of stablecoins as everyday currency. As inflation continues to erode the value of traditional fiat in many countries, citizens are turning to dollar-pegged or asset-backed stablecoins for routine purchases, savings, and remittances. Retailers, both online and offline, are now accepting stablecoins through user-friendly wallets and point-of-sale systems, often incentivizing customers with crypto cashback or loyalty tokens. Cross-border workers are sending earnings back home using stablecoins to bypass fees and delays associated with traditional wired transfers. Even governments are launching state-sanctioned stablecoins to improve welfare distribution and tax collection. These digital currencies offer the familiarity of fiat with the advantages of blockchain, speed, traceability, and low cost. For the average person, this shift represents a silent revolution. Crypto is no longer just an investment, it's money, reimagined for a digital-first world.